Do you think they'll have to bring in sort of more financial repression? So I guess forcing pension funds and banks and other people to have a higher percentage of government bonds?
Well, I think that yeah, I think the answer is that that is probably coming in some form. Whether you actually get through, whether you actually get that legislation or that direct, those direct measures, I'm not certain. I mean, there's clearly a lot of talk right now of a Basel IV. Basel III has been the legislation enacted internationally, which basically compels banks to hold more liquid assets and greater capital buffers. That's been one of the factors that's actually driven the dollar up and has encouraged a huge move into US financial assets in the last decade. And the talk is there'll be a Basel IV of some form, which will basically reinforce the Basel III measures. So that could be something that transpires for sure. It may well be that pension funds are encouraged to hold more debt, but actually the arithmetic of pension funds means that they're holding more debt anyway, for the simple reason that many of these schemes in America and in Europe are reaching or closer to maturity. So the profile anyway is going to be higher debt holdings. Now, I think the other fact I think to note in all this, which is somewhat arguing against the need for an explicit financial repression, is just look at the flows into bond funds right now. And what you're getting, despite, as I say, despite the big losses that bond funds have taken, the huge flow of money, particularly of US investors in bond funds, is actually quite dramatic. And it's suggesting that carry at the front end of yield curves is actually very attractive to investors. I mean, if you can get, you're picking up 5% in US dollar terms, effectively risk-free, or if you want to go for the index-linked bonds in the US, you can get now pretty much 2.5% inflation risk-free, which is actually, a remarkably attractive investment on medium-term view. So it may be that you don't need that financial repression. Already you're seeing these flows. So what I'm really saying is the lesson here is that maybe interest rates have to stay higher for much, much, much longer than people are thinking. But I think to reinforce that picture, the Federal Reserve has got to come in and buy more, because otherwise, if money is going into bond funds, it's not going anywhere else. It's not going to the equity market or more productive investment schemes. So I think the Federal Reserve has got to come in and support it.